Good morning and welcome back to Trading Options Network. I'm really excited to discuss exactly, what has happened this past week and what to expect this following week. But of course, before we go ahead and get into our end of week discussion here, I want to go ahead and get our disclaimer out of the way. So, as I always mention, everything discussed today is solely my opinion, not the opinion of Trading Options Network. So whatever I discuss, what we discussed today, please do with it what you will. That being said, I'm going to go ahead and get right into the chart here. Let's go ahead and get to the S&P. All right, so let's take a look exactly what had happened this past week. I'm going to squeeze it just a little bit. So this past Monday, we had a nice doji candle, okay? As I've discussed in other training videos, a doji is a reversal signal. Okay, it is not a reversal candle, it's a reversal signal, a potential for a reversal. The actual reversal candle would be the following confirmation candle, and that's exactly what we got on Tuesday. It's a big red nasty candle with also we had higher volume than previously for about almost 2 weeks here, up in since April 19th. That being said, the next day we had our Fed meeting with Jerome Powell, the FOMC meeting. As you can see, the market, actually, I'm going to go back. I'm going to open up the 3-minute chart. I know I discussed this on Wednesday, but I still want to discuss it here on the end of the week recap. Let's get back one more day. There we go. All right. So during the meeting, and while Powell was talking, we had this humongous jump in the S&P and in the market overall. But once that meeting was over, it collapsed and gave it all away. Now, why am I discussing this? Well, plain and simple, if you were listening to me that day, I was 100% anticipating another red candle. Okay. However, I did also mention that with there being earnings, I believe that was Apple earnings on the following day. Apple can move the market. Apple has the potential to move a market when it has its earnings because it is such a big company and is such a huge portion of the S&P. And sure enough, not only, well, actually, I'll talk, this is a whole nother discussion here, but Apple had a big jump in the market, okay, or on their stock price. And as you can see, that definitely caused the market to jump. Now, the market did revert down, which I'm not actually surprised because, again, I was anticipating a red candle. But the interesting thing about this is that the bulls came to play and they brought it right back up. And then the very following day, so on Friday, we gapped up and we finished with another doji. Now, solely based on these two candles, I would say that is a very bullish sign. However, again, this was definitely a product of Apple earnings and a lot of the earnings that we've had over the past couple of weeks. There's no doubt about that. But the fact that we still finished below the 50-day moving average, even though we went above it during Friday, we weren't able to finish above it. I'm still not 100% sold that we're going to go higher. Now we can. We absolutely can. We can ride this momentum. It's a coin flip in my opinion at this point. So I would be very, very neutral in my portfolio. In fact, I am very neutral in my portfolio at the moment. I have about the same number of bulls as I do bears. Let's go ahead and look at the economic calendar. As you can see, there's not much coming up this week. Maybe the initial jobless claims. That's about the only thing that could potentially have any bearing in the market and moving it. Earnings, we don't have really anything starting on Monday. Nothing really there that's going to move the market. Tuesday, Walt Disney, probably not going to move the market on its own unless it was a big gap up or gap down for Disney. The one that would be most exciting, if you are the gambling type, would be Uber, because obviously Uber does have a lot of volatility. So Uber can definitely be one where you can play a straddle or a strangle and hope that you get a big move. In fact, let's go ahead and pull Uber up really quick. All right, so here we can clearly see this was earnings. And that one day it jumped up 15%, followed by another almost 3% the following day. So again, Uber can definitely move. Actually, I stand corrected. That was not earnings. Earnings was about a week prior. So I actually don't know what that was. Possibly earnings from Lyft that caused Uber to move up. Who knows? But nonetheless, as you can see, this day was still quite large. It had a low of 67 and a high of 70, almost 72. So almost a $5 move just that one day. That's almost 10%. Let's see if we go back to the last earnings. Here's another one. Pardon me, I have hiccups. I do apologize. A low of 46.67, high of 50. So again, almost a 10% range on that day. So again, Uber can definitely move. Here's another one where it actually gapped down and went down a lot. So it lost 6%. The overall move on that day or range on that day was, let's see, from 49 to 46. So not actually as much, maybe about a 7% move. But nonetheless, again, Uber can definitely have those moves on their earnings day. All right, back to the chart. So again, what do I expect next week? Well, with nothing on earnings really, okay, with the exception of Disney possibly having a small effect on the market if it has a big gap up or gap down. And with really nothing in terms of economic reports coming out next week, your guess is as good as mine. Now, personally, I think the last 2 weeks we had this bounce because we had good earnings from pretty much all the major players. Even though Amazon gapped down, it shot right back up throughout the day. The only one of the big companies, Google, Amazon, Apple, Microsoft, Meta, the only one that really had a rough day was Meta. Okay. Tesla went up. So we had, 5 out of the 6 companies, the biggest companies in the world, were all positive. Yet the market did not jump all that much. I mean, yes, it was $15. That's, about 3%. But 5 of the 6 biggest companies in the world all had pretty good runs after their earnings calls, and yet that's all the market was able to bounce back. Not much in the grand scheme of things. So next week, again, it's a coin flip in my opinion. We don't have anything that's going to move the market in terms of news or earnings. So the question is the market just going to ride the momentum that we had on Thursday and Friday? And I should, specify from Thursday's low up through Friday. Okay. Keep in mind, being that Friday was a doji, the bears did bring it up a little bit, but the bulls brought it right back down below the 50. Just like even though the bears brought it down to, roughly 508 and change, the bulls brought it right back up. So that was a tug of war that nobody won. If I was a betting man, I would think that we will probably have a relatively choppy day, or maybe in a choppy couple days, maybe a little bit more of a tug of war. But ultimately, I still think the Bears are going to win. And I do still think we're going to go down to this 480 level, okay, until the market proves to me that I'm wrong. And I will say, these last 2 days, I was wrong, okay? I was expecting to go down and possibly hit, I'm not going to say 480 by Friday. I'm not going to say we're going to go down that much. But we were definitely going to say, yes, we are still in our pullback. But that's not what happened, okay? We had a gap up, and we finished up on Thursday, and then we gapped up again on Friday. So, again, the question is, do we ride the momentum and continue moving up? Or does everyone go back to being a little fearful, saying, hey, there's nothing to move the market this week, so I'm going to start selling my positions, and causes the market to go down? One thing I did forget to say here. So even though Apple, this is interesting, Apple declared they had a 4% decline in sales. They had a 10% decline in phone sales specifically. And even though they beat earnings, the earnings were definitely adjusted knowing that their sales were down. Yet they had, I think it was a positive 13% day after earnings. And the reason why was because they also announced a $110 billion share buyback. That is huge, okay? And that's actually more proof that I don't play earnings, because God only knows what's going to happen. If they did not discuss that buyback, that is not a 13% gain. That's probably a 13% drop, just simply due to the fact that their earnings were not that great, okay? Again, their sales were down. Their profits were down. The revenue was down. Everything was down. But they gapped up 13%, or not gapped up, but they finished up 13%. Okay, let's actually pull up the chart since I'm discussing it. There we go. So it gapped up 13%. Still finished up 6%, so it actually did gap down quite a bit. But nonetheless, that is huge. Basically, what a share buyback is, if you don't know, a company is going to announce that they're going to buy back shares. So it's going to lower the total float of shares available to the public, meaning that any dividend that is going to be announced is going to be larger. So it's going to cause people to want to buy more shares. Okay. So again, my opinion, solely my opinion, I believe Apple did this because they knew they were going to have a relatively poor earnings call, but they don't want, obviously, their shares to tank for their investors. So they go ahead and do announce the $110 billion share buyback. Okay, again, I didn't listen to the exact reasons. I don't really care what they say because, they can say whatever they want for the most part. But nonetheless, that's my opinion. I think they announced the share buyback because they didn't want their shares to tank, because it easily could have gone down to the 150, 155 level had they not announced that share buyback. And it also could have caused the market to completely crumble under its own feet as well. So again, that's just another reason as to why I don't play earnings very often, because we never know what the companies are going to announce. That being said, let's get back to the S&P. There we go. So again, the question is, are we going to ride the momentum that we had on Thursday and Friday, or is the market going to get complacent and ultimately, we start moving back down because there's nothing to move the market back up? Again, we had 5 of the 6 major companies announce their earnings over the last couple of weeks, and even though it was relatively choppy, it definitely went back up from the lows about a week, 2 weeks ago. So without the news upcoming, who knows what's going to happen? I know I keep saying it over and over again. I sound like a broken record. Personally, I think we're going to go down. Ultimately, I would not be surprised if it was choppy for a couple of days, in which case the bears do go ahead and ultimately win that tug of war, and then we start moving back down. But time will tell. Time will tell, as always. I don't really have anything else for you guys today because, again, there's nothing upcoming for this week in terms of economic news. Last week, actually, I can discuss a little bit more about last week because last week was interesting. I already talked about the FOMC meeting. But ADP employment, that went up. Employment cost index was up. Initial jobless claims was actually down. So U.S. employment report, interestingly enough, was down. U.S. unemployment rate was up. It's interesting. These two numbers here are very interesting to me because it almost contradicts the numbers that came out earlier. But nonetheless, that's exactly, the wages were down. So this is what actually caused the gap up on Friday. Okay, I did want to talk about this, and I almost forgot. But yes, this is what caused the gap up on Friday, because when you are trying to lower the inflation rates, these are the kinds of numbers we want to see. Okay, we want to see a lower employment report number. We want to see a higher unemployment rate, and we want to see lower hourly wages. The problem with this, again, is inflation is still moving up, or still very high. And that is a sign of a potential stagflation. Okay, stagflation is exactly what you get when you have higher inflation and a slower moving economy. And stagflation is usually a very, very bad sign for the market overall. So again, that's just another reason why I think we potentially go sideways and chop around a little bit and then potentially go down lower, down to that 480 mark, possibly even lower. We'll see what happens when we get there. I still believe we are going there. But, I'm excited to see what this week brings. Am I going to be right in this, or am I going to be wrong? In which case, I will come on here and I will be the first person to tell you, hey, I was wrong. The market was like, screw the potential stagflation, screw the fact that inflation's still high. It could just completely ignore everything. So we'll see. We'll see what happens. Again, that's pretty much all I have for you guys. We'll see what happens. We'll discuss it all during the week. That being said, I hope you guys have a great rest of your weekend. Take care now. Bye-bye.